Right. Alrighty. Friday, December 12th. I have been MIA almost all week. Just haven't been feeling it, folks. You kind of know where I stand. Anyone who's followed me for the near 10 plus, it's been 10, almost 12, 2012. So 13, whatever, plus years. If I don't really have much going on or I have much to say, I'm not one to just kind of get on the airwaves and just spew. I don't like to be I don't like to be perceived as a talking head. So if I don't have anything to say and I don't have anything going on, I'm not going to broadcast. And that's just how I'm going to roll. I think the story of the day or the story of the week, is obviously FOMC. But I think once you look out beyond, once we look beyond that, I think we pretty much have some fairly green pastures ahead for the market. And I don't mean just for it to go up, but I think for us to pretty much stay in line to what has been going on, where I think we're just going to get this lackluster drift, so to speak, higher. And I think we're going to have days like we had yesterday where we see the NASDAQ get absolutely crushed. And then you see it today. It's actually getting hit again. Pretty much everything across the board, NASDAQ-wise. It's funny, everything in big tech that I follow just about is all in the NASDAQ. Everything is across the board down and getting hit. But what I found incredible about yesterday was the fact that although Oracle kind of dragged everything down and the market seemed like it was just horrible, and we managed to turn it all around and rally and turn out green on the day. Outside of the Dow, I'm not even talking about the Dow. I don't really follow the Dow because to me, it's not really a good indicator of the market as a whole. Because again, it's only 30 stocks. Most of the Dow is made up of literally Apple, Microsoft. At this point, I think literally it's like almost 35 or 40%. So to me, that's not really a very good indication. But when you look at the Russell and the strength of the Russell here is quite extraordinary in my opinion, and that is what I believe is going to be the driver for us going forward. I had the magic line here, the breakout line, and not only have we broken out up over this and making new highs, we blew it out. And this is probably indicative of, if you want a poster child of a blow-off type of top bull market, this is it, in my opinion. It didn't come without its pain, right? We look at the pain points down here just earlier in the month, literally, 2 weeks ago, not even 2 weeks ago. And here we are, all-time highs again, and we blew this out. And it wasn't for a lack of trying, because you look here as well. There was a few days here where this thing was just smashing its head. And we did eventually blow out, and now we're actually in like all-time highs here on the Russell. And the reason I think that's important for the overall market, and the moral of this little platitude is, I think this is what these smaller stocks are going to be what lifts and keeps the market going higher. And I think we could really be in a place here, and at least in the next 6 to 8 months, where we're looking at the Russell being the index that is going to be the one making new highs continually week after week. And we have the NASDAQ not making new lows, all-time lows, and maybe not breaking new highs, but churning and burning away here. And so I think we're in a little bit different market than we have been in quite a long time. And I was actually thinking about it. The last time I can remember when the Russell was actually a stronger, better market than the broader markets was literally 10 plus years ago. It's been well over 10 years. I was thinking 2014, 2013 time frame. So anyway, with that being said, I think that is what we're looking to see here. And the reason is the Russell, if you actually look at the Russell from a let's just look at this from a visualization. Here's the Russell, and you can see what a huge diversification it has. How it has so many stocks, right? It's 2,000 stocks. But not only that, but it's made up of a lot of industrials, a lot of financials, and a lot of materials. Information technology really is not a big piece of this, and these have been the sectors that have been moving, are the materials, the financials, the industrials, and to a lesser extent, and most recently, to healthcare as well. And so with that, and then compare that to the NASDAQ, right? And you basically have, even though these say communications, these are all tech driven, all this. The only thing they really have that's consumer discretionary is basically down in this quadrant here. And you can basically say, all right, even though they classify an Amazon and a Tesla as, consumer discretionary, they're really not. Tesla's kind of a technology company. I don't care what you say, because of SpaceX and everything else they have going on with the robotics, and same thing with Amazon. They have AWS and all that stuff. So this is kind of a misnomer, and this is what I think is the problem with the NASDAQ right now. Is overall, technology's going through a little bit of a self-healing process. It was fast and furious for well over a year now. It's been kind of the whole AI craze, and it's cooling off, and rightfully so. It kind of needed it because things were kind of going gangbusters here, a little too fast and furious. And I think what's going on internally in the index is I think people are becoming more conscious of what names to own. And it's not just buying the Apples and the Microsofts, and they're starting to look at other names and move money elsewhere outside of these stocks. And if you think about it, if you think about it from a money manager point of view, I have billions of dollars, right? And I already made all this money. Like, I have to look for the next opportunity. What's the likelihood of any of these stocks having the potential to double over the next 12 months after they've just tripled or quadrupled, right? I mean, so if you put it in perspective that way, it kind of makes sense of why money is moving from, the NASDAQ, S&P type of moves, and you're getting the movement of the money into the Russell and the smaller stocks, because the likelihood and the probability of these stocks making big moves is a lot higher at this point, based on just where the other stocks have come from. Now, they're not like liquidating those, but they're lightening the load. And so anyway, that's kind of what I think the story of the market is this week. And the Federal Reserve cut kind of put that in motion. So that's kind of my, that's my half-ass economic sonnet here for this week, and that is kind of where it's brought me to in my trade. And quite honestly, it's what's made trading very difficult, because quite candidly, I have been concentrating on those big names. And let's just go into that. These are the big tech names. I have been concentrating on these big tech names for a long, long time. Not forever, but in a long time, meaning that these are just been the names to trade. And I don't think that's so much the case anymore. I think these are kind of running out of gas. There are a few, I think, that do have some potential. I'm short-term bearish on Netflix. As I said before on this broadcast, that I do like Netflix short down to $90. When it does get, in fact, down to 90 and lower, I think Netflix becomes a buy. And specifically, anywhere down near $85 or so. It becomes a pretty strong buy for me, because at that point, I think it will have cycled through this bearish trend that it has going on. And I think you're getting it at a much better value than it is now. And so, and I did turn on the auto fib extension. That right now is what I'm using as kind of like targets. So anything that has fib extensions to the downside, I'm generally going to be bearish on, and anything that generates fib extensions to the upside, I will be bullish. And so that's kind of how I'm playing it. And so you're likely not going to see too many trades coming from this group anytime soon, because again, as I said, I think the market's kind of moving away from these, and where it's going, and a lot of names are going to be these kind of animals. And I kind of have them grouped as, I just created the group called AI, and not all of them are generally AI based, but they have an AI component, that's outside of just the big tech names. And that is why I actually, put these all in this group. But likely going forward, you're going to start seeing more trades in these types of names, and this list gets bigger and bigger every day. I'm not just going to go and just add a bunch of stocks to it. I've been adding them to it because honestly, I have not traded many of these at all. And now that I always like to make sure that there's a lot of underlying fundamentals that exist in the stocks that I trade, and many of them you're aware of, liquidity, volatility, options liquidity, and really a matter of, is it really a legitimate stock, and it's not just a freaking meme stock, or, one that's kind of, I call them like headline grabbers, where they're just stocks that trade on headlines and nothing more. And to me, those are, I stay away from those too, because those tend to be dangerous. So that was kind of my opening remarks. Getting back to real kind of trading here and looking at things to do. A lot of these stocks that are on this list, as far as volatility, because volatility just doesn't exist, they suck. I'm not going to trade this. This is the silver miners. These derivative, and I'm going to call this is kind of a derivative product of silver being, even though this has been around for a while, but this is really a derivative and getting on the list now because silver having its big move. And to me, the product overall is kind of a junk. Honestly, if you want to buy it, that's fine. But as far as the options are concerned, I don't like it. There's bad. The spreads are not great. Even though there is a lot of volatility in here, I don't feel like there's very much liquidity in here. Even though it does look like there's tons of open interest up and down, I'm just not feeling it. Because when I go in and I try and do trades, I'm still seeing for something that has all this open interest here like this, these spreads should be no more than $5 wide. I mean, at most, 5 cents. These should be no more than 5 cents. And the fact that they are 20 and 30 cents in most places just tells me that there's a lot of manipulation going on in this piece of shit. And I just don't want to stay away from it for now. I mean, unless you're just going to go out and buy it, that's fine. But as far as the options are concerned, I'm not feeling it, folks. You know, there's no reason why when I look up and down and with the amount of open interest here and the supposed liquidity, right? Everybody's long, obviously, right? Everybody's long. Nobody's really short unless there's people selling puts down here, which I doubt it. These are probably more hedges than anything else. Again, I'm just interpreting, but everybody is long in here, and the spreads are absolutely garbage based on what the open interest is. And so that is kind of why I've stayed away from it. And this has been on this volatility list for a while. And if you look at it, it has been a banger. And volatility has stayed bid in here for quite some time. And it continues to fire on all cylinders going up. And then there's, other stocks. And then when I was looking in here, almost all of these, and the fact that this thing is even on here, this Nextdoor at $2, I don't know. I'm kind of getting suspicious of even this list at Tasty Trade, because when I go in here, I'm like, all right, look, all this option activity in here at Nextdoor. Now, I don't even know what they do, and I don't really care. But again, where is all this? I mean, open interest like this high, the stock's freaking $2. Like, so what are you buying options for? Now, look, it's a fraction of the cost. But, at $2, who in the hell is buying all this, right? This is all meme garbage. And that's kind of another reason why I'm staying away from this kind of crap. The same thing with like iRobot, and there's a lot of junk, I guess is what I'm getting at. There's a lot of junk in here that has high volatility that I believe rightfully shouldn't even be on this list. Like, there should be some other criteria for being on this list other than just high option volume, because a lot of this stuff is junk. And then a lot of things that are on here are all metal based, which is another kind of weird thing that I haven't seen since I've been using Tasty Trade. I have never seen it like this list, where it's basically all concentrated in one general area, being like metals and mining. So, again, that might be because of, look, gold and silver has been banging it out and making new highs day after day. That tends to increase the volatility. I get it. And then that kind of translates into anything related to it as well. And, so it makes sense. So I'm not just going by if it's on this list or not, whether it's high or not. I'm trying to do a little more research on what exactly the companies are and whatnot, just before I decide, hey, look, I'm going to go and sell volatility, because I don't want to get stuck in something that has picked up an activity of late, making it a high option volume stock. And then once it cools off, it kind of becomes illiquid, right? So you got to be careful of that, folks. That stuff that's being deemed liquid today may not be liquid tomorrow. Because, when the liquidity dries up in something, it's a tough place to be. And you don't want to, especially options, you don't want to be there. And that is, another reason why I have tended to always stick to those bigger names, because those bigger names, through thick and thin, whether it's, going up or going down or going sideways, there's always liquidity there, right? So anyway, and then I go through and I start saying to myself, well, gee, man, there ain't shit. What the fuck do you do here, man? There's really nothing you can do from like, a volatility point of view. The UNG, this is a piece of fucking shit. I highly recommend just stay the fuck away from this thing. If you're going to trade natural gas, go trade natural gas. and you don't have to do, and I think there is a good trade here in natural gas because, we have a good high IV rank. Natural gas had a huge run there for a while, and it's recently kind of collapsed, which is great because it not only went through all this, but what I think is great is it maintained its liquidity. And I would say if you're going to go and trade natural gas, just do the damn futures and trade the futures options. No one's going to go and deliver a freaking, a metric ton of freaking natural gas to your doorstep. Because I've heard that when somebody was like, oh, wow, you trade natural gas? Well, what if they were like, well, what if you have to get delivery? I'm like, how in the fuck am I going to get delivery on natural gas? What do you think they're going to do? Send it through my my gas line in my house? Or are you going to show up with a fucking truck? Or they'd have to show up with a few thousand trucks. I mean, you realize how big this fucking contract is? And nobody's taking delivery on it. Those stories are like from the fucking 1930s and 1940s. They don't fucking take delivery on any of this shit anymore. I think the only thing that you have delivery, I think today in today's future, and I could be wrong, but I think for the most part, the only thing you have a risk of getting delivery on is I think it's milk. I think it's milk is the one future I think that you have. There's an actual danger that you can get forced delivery on milk. But reality is I'm not going to hold this. If I'm going to hold this for fucking 2 weeks, it's probably too long. You know what I mean? Even though I'm going out to like February or March, I still like the February and January. I'm going to go into January here. And the trade that I like here in Natty is I do like a little iron condor because I think you can do a little iron condor trade in here. And you can structure these just like you would any other contract where you're kind of doing it, a dollar wide based on the contract. And then if you look over here, like buying power, I'm only using $500. I'm not using a ton of money here. Look, this is a big contract, but as far as buying power, and this is a fully covered trade. You have, your risk exposure is your risk exposure. That's it. Okay. Now look, if you were actually doing them naked, then, you'd be in a different store, now, if you want to do something like this, I think this is a good trade, in my opinion, for Natty. You're kind of right in the wheelhouse. Selling. Where the hell did that go? You're selling. Wow, where the hell did that go? Why is it not showing up? There it goes. You're kind of right in the middle here of where it's been. And you can make adjustments as you go, right? So, if you start getting pressed up to the upside, you start rolling your puts up. And you do this, and you operate this and mechanically function with this just as you would any other trade as if you were in a stock. Now, can you do the same thing in the UNG? Yeah, you probably can. Are there other things out there that you can use that are like natural gas type of derivatives? Yeah, you can, but quite honestly, they all fucking suck, folks. They all stink. I don't care what anyone says. I know there's a number of ETFs out there that try and mimic natural gas. I think there's Burn or something like Bloomberg has one. They all suck. And the problem is that they all suck because there's no way inside an ETF they can operate fast enough and reflect price movement in the same way that the futures operate. They just can't do it in an ETF. They're just not that fluid. ETFs are generally very stagnant. Now they say in the perspective that they're able to do this shit, that they can actually do options inside, but they are not going to be able to emulate the underlying commodity. And that's true in just about everything. If you want to really know the truth, look at the difference between where the gold and silver markets have gone and where GLD and SLV have gone. Now, have they all gone up? Yes, but those two ETFs will always lag the commodity. And it's because, again, they're ETFs and they just can't operate structurally inside that ETF the way the future contracts run. So anyway, that's kind of my trade here in Natty Gas. This one I can actually put on. And I have to put this on. I can't stick this in. I can stick it in my IRA, but I'm going to put it in my trading account. Oh, you know what? I don't have. That is a. I thought I had eligibility in there. No, I don't. What happened with that? Anyway, I thought I had eligibility in there, but I guess I don't. So I have to do it in my IRA. That's weird. I know I actually... Oh, you know what? I know what happened. I know what happened. So what happened was... Let me change this. What happened is I migrated my accounts. I used to have a trading account in my own name. That's what happened. All right. So sorry about that, folks. But hey, you know what? This shit happens, man. All right. Let's clear this. All right. Back to Natty Gas. Natty Gas. The January contract. Yeah. You were at the 350. The 350, 340. And we're at the 530, right? Yes. Yeah, I remember that. And there's our trade. So, so that's what happened. I had what happened here? Oh, the 530 again. So I had done that. I transferred my accounts, put them all in one account. And I don't think I actually activated futures in there. So I have to do it in my IRA. So 45 cents. We're going to just go and blast this one off. And I probably get filled because these markets are already open. All right. So there you go with natural gas. So there's, again, this is one of those. Now, I highly recommend that you do not trade this contract. Because look, if I were actually to trade this contract, look at the size of this fucker thing. 13. Now, look, if you got 13 grand, you got 13 grand to trade. Natural gas, it's a big animal, man. They don't call it the Widowmaker for nothing. It's crushed some people. So if you don't feel safe doing it, I guess look at some of the other stuff. I would highly recommend that you just stay away. Because all the other stuff is a crap. And so let's just, for argument's sake, since I'm going down this road, let's look at something similar in the UNG. All right, so here's something similar. Think trades at $12. There's not really a hell of a lot we can do in here. You can see there's not. I wouldn't even know what to do in here. And if I was going to do anything, God. You can see you're getting pennies down here. I just don't see. I just don't see how you would be able to do anything in here. This is probably about equal to what we had just done. And you can see here, I got to use $1,000 freaking dollars. I got to use $1,000 in here in this piece of shit to generate $72. It's like, that's why I have no desire to do anything. There's nothing you can do in here that is ultimately attractive. I mean, outside of just outwardly selling calls or selling puts, there's nothing in here you can do. I mean, this is not a very good use of capital, in my opinion. So that's kind of what brings that off the table. So that's why I don't even want to look at it. Again, it's a piece of shit. And plus the fact, if you look at this thing over time, I want to say they've reversed split this slob at least 3 or 4 times that I'm aware of. And let's go look at that because I'm almost positive they have, from my recollection. And I even have it on here, and I do follow it, but I don't even know if they would even have it on here. So let's go to the day. Here you go. 1 for 4. So here's a 1 for 4 reverse. That's on there. Here's another one. Another 1 for 4. Here's another one. 1 for 4. 1 for 2. And then it was born in 2007. So there you go. There's 1, 2, 3, 4. And there was one just in 24. So 4 fucking reverse splits in that piece of shit. And how the thing even stays in fucking business, I have no idea that they've even kept that thing. But I guess, enough people are trading it. But it is a piece of junk. So stay away from it. Lululemon had earnings yesterday. It's gapped up pretty decently. Let's take a look at Lululemon. Lululemon is not too bad when it comes to volatility and liquidity. It's okay. I really have not done, it gets a 3-star here. I have not really done very well in this over the years. I would have to say I've probably lost more than I've made in Lululemon. But this would be an after earnings trade. We have 35 days in January. We're going to get a pretty decent, that volatility is going to get crushed a bit. I would lean a little bit short in here on Lululemon. I would probably take a look at maybe the 220 or the 230. They are going to open up down a bit. I kind of like that. And margins in here are fucking awful. Look at that. Oof. That stinks. Let me see what margins are really like. Again, I don't have margin. I have to go to my joint account to look at margins. Yeah, $2,000 in there. That's actually not that bad, quite honestly. I thought it would be more than that. I thought it would be like 4,000 or 5,000. But anyway, this is probably going to be about $87. It's up about $10, $20. It's up like $20. So this is going to be about $2 and change today based on where that price is. Yeah, I kind of like that spot. Either the 230s or the 220. You want to get aggressive, maybe the 220. But I would lean into this one short on Lululemon because I don't really think... And you look at this slob, I don't know if this is really... I don't think this has got much more legs to go. It looks like it's going to fill this gap. Let's get into the 4-hour. It looks like it's going to fill this gap here. Well, it was a gap on the daily, but it's not a gap on the 4-hour. It looks like it's actually going to, and it looks like it's just about to break this high here. I mean, I can really see this thing making its way up to about 213 or so. Let's go into the hourly so we can look at this a little closer. Actually, the 4 hours better. Sorry. Yeah, so I'm actually looking at this as expecting a lot of resistance, even where it is here, right? Because this was the last swing high before the last earnings cycle, right? They hammered the piss out of it. It really created a nice base down here at 160. There's no question about that. It definitely built a really nice base down here at 160. But I really don't know if this thing's going to have legs to really break back up here. I mean, this is 226 and this is that's why I think the 220 or the 230 is a nice place to short. So I kind of like that on that side. And so I think I'm going to do that today is get short a little Lululemon, possibly selling these 220s or 230s. And I'll do a spread because again, I don't want to use that much capital. Problem in here though is going to be they're $10 wide, but it is what it is. That's just how they roll. So I'll probably likely do one of those, either the 220s or the 230s. So look out for that. So I would take a shot at those. I would stay away from buying puts. Would I? No, maybe not. Maybe the trade is maybe a double trade here. Maybe a little sell some calls and then buy finance that. No, we're not going to do that. We're not going to do that. I like those calls up there. We'll just call it that, right? Either the 220s or the 230s. And then on the other side, depending on where these come in, you could feasibly probably sell either a 160 or a 165. Because as just looking from that chart, it does look like there was a really nice base brought in here at around that 160 level. And to me, I think that's a really good spot that you could sell down there and use that to your advantage. All right, so yeah, that's kind of the trade. So I know I kind of like spun around a little bit there, but yeah, I kind of like that trade. I kind of like the 160, 230 strangle. Now that I look at it, I like the strangle here on Lululemon, the 160, 220. Now, it's definitely a delta negative trade. It's got good theta. It's got almost a 70% pop. And, just looking from, kind of mixing volatility, price movement, and a stock with a little bit of technical analysis, I think you're in a good spot here for Lululemon to kind of play a little bit of a little vol crush and a little directional down, because even though you're short that put, it's not enough. It's not bringing in enough negative delta to make this kind of a bullish trade. This truly is a bearish trade. All right. So there you have it on Lululemon. Now, obviously, if you don't have the capital, come in here and cover it. You're going to have to do them $10 wide because they don't have the strikes up there. So you're going to be and you're looking at buying power about $600, and you could bring $300 in, and you still got a 60% probability of profit on something like this. And you have something that's very manageable, right? If you get pressed to the upside, you roll your puts up. You get pressed to the downside, you roll your calls down. All right, so there's a Lululemon. Now, as I start going down, Micron, I think this one's kind of run its course. We sold some volatility in December. I recently got rid of those, and I think it was basically a scratch. Let me even look. I actually think I lost $84 on those trades, and this never came in. Volatility never collapsed in here, and the problem with it is that it's got earnings coming up on the 17th. So earnings next week in there, and never really got. So we're actually going to probably trade that again, but we'll be looking out in January on that one. There you go. We got filled in natural gas. Look at that live natural gas. Natty gas. Those take a while. Those futures trades do take a while, so don't start playing with it. Just throw it out there, let it sit. Somebody will come and grab it. Looking down the list. Nike, kind of mulled this one around. Problem was I stayed away from it because earnings next week, so I kind of stayed away from that one. GDX, I'll put this one up here. Problem with this is I've been snake bitten on this one quite a number of times, but this volatility just keeps having me come back to it. And it's been an absolute monster, right? It's been a monster, just like everything else metals related. This GDX it's an ETF. It is a VanEck Gold Miners ETF, and it's been on an absolute tear. And volatility has remained bid in here. I've just been having a hard time finding a trade that kind of sits with me. The only thing that I really feel like I can do in here is sell puts, because I just wouldn't feel, because it's been on such a tear. And look, I know everything always eventually has its pullback and everything else. I just feel like if you sell calls in here, you're going to get your face torn off, just because of where this thing is. You can bring in a ton. So if I were to do a full, let me kind of play around with this one, because you actually need to go up into about the 15 delta or so to get any kind of, and the 15 delta brings me to about a 78 or even a 77. This really isn't a bad trade if you're looking to do a strangle. Sell a little volatility in here. You're outside of the one standard deviation move here in January at 98. You're still bringing in over $1. Well, you should be able to bring in over $1. But, looking at this too, this is one of those where you got to be careful. And again, this has been my problem with this ETF. If you're not going to just outwardly buy it as an ETF, physically buy it, the spreads in here suck. I mean, for something that has dollar wides, right? Dollar wides, and you're looking at 40 fucking cents almost in here, 35 cents. That's bullshit. That's fucking bullshit. And look at that open interest. So it's not like it's illiquid. So they have to. So again, this is another one of those ETFs that I think the market, even though it's been hot and there's a lot of option activity, the markets in here suck. They fucking suck. I mean, there's no reason why an ETF like this that has a lot of liquidity. I mean, this thing does a lot of volume, especially now of late with the metals markets kind of going nuts. There's no reason why these shouldn't be 5 cent wide or even less. These should be 5 cents max across the board. And the fact that some of them are 20 fucking cents, 35 cents, fucking bullshit. It's garbage. Again, that's why I stay away from certain things, folks. And to me, it's like, what's going on in here is they're taking advantage of people. The fact that the spreads are so wide, because there's no reason for it. There's no reason for it, because this is extremely, extremely liquid. And so that is kind of why I tend to stay away from these, like the UNG, these products, these ETFs, that are deemed liquid and have supposedly good options volume and all this other stuff. But when you look at the markets themselves, they suck. I mean, look at this. And at the money, almost at the money or near the money, as you start getting the money, these are $1 fucking wide, like more than $1. Like, what the fuck is that? What is that? It's garbage. It's garbage. So anyway, as much as I would love to do something in here, that's the shit that keeps me out of a market like this. And if I was going to do anything, I would not want to be short. I mean, the play is here is to be short calls. And the reason is there is huge call skew. I mean, here's And you can see there is tons of, there's people just rolling the dice up here, man, right? Buying these out of the money. And they are just rolling the dice all the way up, baby. Look at this. I mean, 105 has got 120 or over 1,000 contracts. 115, 7,000. So there are some people rolling the dice, baby, up there. And, hey, maybe they know something we don't. But, 35 days out to be at the 129, not my cup of tea. But the only thing I would do in here, if I could do anything, is I would sell puts and I would stick around the 78 place, like 78, 77. If you want to get aggressive, maybe go to 80. You're kind of right on the cusp of the expected move is $9. So, it's up again $2 today. And that's about it. That's about all I got. And then Oracle, Oracle's Oracle. You can do whatever you want. I am just getting absolutely butt fucked in this. So, because I'm long, and I'm short. I'm short 220, 210. So I'm getting ass kicked on that one. Also, I'm way out here in December. I think I'm also in some options that are just they're cooked. And so Oracle sucks. Freaking garbage. So they actually dropped the ball, but whatever, it is what it is. That's all I got. I mean, there's really nothing else. Again, I think we're in for a pretty slow grind higher. And, and as I said, they've been having, they tried to really kill this NASDAQ yesterday. And I was really impressed the fact that, I think at one point my account was down like 5,000. I want to say, it was down 5,000 or 6,000. And at the end of the day, it was only down 1,300, which, again, they tried to blow it up yesterday and they just couldn't. So there's a lot of strength in here in this market. And this market's very resilient. Now, I don't know if it continues. But, based on just yesterday, because it really looked like yesterday they could have really clipped that NASDAQ and it could have been down 600-700 points easily. And it looked like it was going to be, but they didn't. And I was pretty impressed with yesterday's price action, the fact that they bought that thing as hard as they did. So anyway, there you have it. Slow day today. We just did some natural gas. Let's put the natural gas up here real quick. We'll put natty gas. Big move here on natty gas, right? This thing was cooking. Fact, again, I like the fact that it actually kind of blew up here. And you can see natty gas, it definitely takes the elevator up and just gets pushed off the freaking top floor. It doesn't fall down the elevator shaft. It gets tossed off the freaking building. When it goes down, it gets absolutely hammered. And that's just the way they roll in the natural gas pits. So not that there's a pit anymore, but it always sounds better. So anyway, there's natural gas, and then I think we're in a good spot. Right, we're right around this area here. We're at the 350, which is way down here. And we're up at the 550, so we're even up higher than the highs. So, again, I think we're in a good spot there in natural gas. And then, to kind of stick into commodities a little bit, I can't help myself but to get a little long on crude here short term. Now, it doesn't look good. From a technical perspective, this does not look good. It really doesn't. It looks bad. But I think we're getting to a point here where we can I think we're getting to an area where we can expect a bounce. right? I think we are getting to an area here where we can expect a bounce. I'm not going to try and time it. I'm likely going to do something next week. And for that, I'm going to use the USO because this actually has been okay. This is one of the few ETFs that is okay, I think, to trade. And it actually has been okay. It's like I said, I've done okay with it. You can see I'm in a couple of positions already. I'm in 70s. And I'm in this calendar spread. And so I'm actually going to add on to this one a little bit. And it's not going to be a volatility play. It's going to be, probably just a simple call spread or something like that. I'm not going to do it today, though. Likely going to do it Monday or Tuesday next week. Get through the weekend. And that's it. That's all I got. Gold still on fire, up $57. Silver kind of cooling off a little bit today. It's not up. But gold kind of having its day today. And are we going to break? No, we didn't break highs yet. But we're going to put an alert in up there. We're damn close. We're damn close. Looks like they want to break it. All right, so that's all I got. Have a good weekend. I'm not going to be doing much of anything. I'm not trading any futures today other than the natural gas. I'm still short MicroStrategy. I'm still short MicroStrategy. Although this is even saying that it's expecting a bounce, I think we go and test those lows at 150 again. That's kind of my target on MicroStrategy is 150. And when we get there, I'm going to reassess. Possibly it might be an area for you to get long, but I don't know. I don't see it. So there you have it. So that's it. Have a good one, and I will hopefully be back Monday.